Good afternoon, everybody. Welcome to the closing bell here at MarketStream.live. It is July 17th, and we are now getting into the heart of earnings season here at MarketStream.live. My name is Joseph Cusick with the Cusick Group Securities, offered by MoneyBlock, and we need to start paying some attention here. Now, the markets, we are testing all-time highs again, so this is nothing new. As a matter of fact, I've had a lot of discussions over the last couple of weeks with clients, and they're very secure with the fact that I haven't deployed as much working capital. Not to say that we don't have a lot of activity in our accounts, and we're positioned to take advantage of both upside and downside. That's how we play it here at the Cusick Group. But with that being said, the markets aren't really tipping their cap, except for the fact that the bulls are still clearly in control. This is your fear indicator, folks, VIX, V-I-X. This basically is the gauge that the market uses for fear. If that number starts to get higher than 20, 25, then you see an extended or expansive point of fear. Now, when you see it down in these levels, at the 9, 10 level, and even into the upper 8, you're talking about historic lows. So the bottom line is that when you see this kind of action, folks, don't get too complacent. Now, with the volatility now testing its 50-day moving average, it went out at 990. Going into the heart of earnings season, we're just going to take a look at the major indices, and then I want to take a look at a stock that's announcing tonight, and then a handful of stocks that are going to be announcing tomorrow morning. Give you some context on what you could expect for potential movements in those underlyings. The Dow Jones finished down 8. So very muted, quiet day, as you can tell, but above that 20-day moving average at 21,633. Again, I just use these moving averages, folks, to tell me two things. One is, what is the current overall trend of the market in both short and intermediate terms, 20 and 50 days? Once I've determined that, then I look at these levels as either support or resistance levels. That's it. Nothing more, nothing less. I use things like implied volatility and binary components like earnings events or announcements like the Fed to give me better context. Taking a look at the S&P 500, basically very muted again today. Finished up down 10 cents, still above that 2,458, challenging those upsides, folks, but not a lot of conviction. One note on all of these large caps, as we are now going to take a look at the NASDAQ. Lower than average volume, and that has been something that we have seen over the last week or so. As we get to these all-time highs, folks, you're just not seeing a lot of, or if any, new money going to work at this environment. Now, yes, you could say it is summer, but no, the reality of the fact is, who likes to buy at all-time highs? Not many people, especially as we were talking about last week. You look at Nike, the short interest out there is at 1.2% of the total float. That's 60 million shares in a stock that has over 5 billion shares in float. So, again, it doesn't boggle the mind that we're not seeing huge volumes at these levels. Earnings could be that catalyst, though. Hitting these all-time highs and staying up here means that, like taking a look at the NASDAQ, it's been able to hold this level, the 20-day moving average, after being tested early last month, now in July, holding these levels but not going up with any sense of conviction, just staying the course. And that is something that I want to be careful of. The NASDAQ, watch 5833 on the NASDAQ. Taking a look at the small caps, and in full disclosure, I do have my clients exposed to the small caps. Russell 2000 finished the day right above their 20-day moving average. It had been challenging it all day. Finished at 1431, right above that 20-day moving average at 1430. So the short-term and intermediate-term bulls on the small caps still very much so in charge, but we're going to keep an eye on that. And as I noted, I do have my clients positioned in there. Crude, spoke about this today on Bloomberg. I still think that the sweet spot for crude is still around this $45 to $44 level. A retest there, a hold, and then some conviction to the upside, either because of the fact that there's better economic data out there, some sort of reform on healthcare, or we start to see that they pull back on production. We do continue to see here in the U.S. that the rig counts are going up. Baker Hughes came out last week on Friday, 2 more rigs online. Doesn't sound like a lot, but with the glut of inventory that we continue to have, even though we've had some decent draws over the last 2 weeks, and we'll watch Wednesday very closely with the EIA, folks, oil needs a lot of work to get a catalyst to the upside. And until I see either bigger demand or less production, I got to say that oil is going to have a tough time. And as you saw, it just basically stayed in this very tight range. Taking a look at the gold contract, bounced pretty nicely today, staying right above its 20-day moving average. Now, of course, we're looking at the 30-day chart. If we actually move it to a daily chart, it's right at its 20-day moving average at right below it at $1,241. That's a price level that you're going to want to see. Actually, $1,237 is going to be the first point of resistance. But the gold bugs, even though we're not seeing a huge amount of inflation, or at least not on the forefront, the dollar weakness helping a little bit with this commodity. Now, I think it helps more with the oil markets than it does with the precious metal. But watch the inflation numbers. If we get any hint or sniff of inflation, let's see how that impacts the gold contract as well as any uncertainty in the marketplace. Now, TLT, the ETF that tracks bonds, bond price is still going up. That means yields are coming down. That's going to put some potential pressure on the banks. Everyone's watching these banks. JPM came out, great earnings. Stock got whacked. We're going to have some earnings out tomorrow morning, and I'm going to give you context in 30 seconds. Bank of America, Schwab, Goldman Sachs, Ameritrade, just some notable financial names. I'm going to give you the price action that you could expect going into these events. But looking at the bond action up, now, yes, it was up only basically around 0.2 of a point for the 2, 10, and the 30-year. But the point being is we're seeing the tail end of the curve, the longer end of the curve moving up in price action. That right now is not very bullish for yields, meaning that yields go down when prices go up in bonds. I've explained that to everybody quite a bit, and I think you're all getting it. But that is not something that we've seen. Now, Netflix. Netflix is one that's reporting this evening. Now, the stock's trading now after hours at 175. To give you context, going into this, they settled at 161. When I looked at the options and the implied volatility that's being run, first of all, the IV rank came in at 46 on a scale of 0 to 100, with 100 being the highest expectation of potential violent moves, 50 being moderate, and in the, getting into the 1 to 10 IV rank, very little expectation of violent moves. Well, it came in at 46, so it's in that moderate level. And the stock was pricing, the options were pricing in that the stock could move $11. Well, the stock has actually moved about, right now, $15. So it's outside of that expected move going into the event. And basically through next week, they're pricing in about $12.50 to $13 move going into next Friday. So the bottom line is that you're seeing that Netflix is moving to the upside. It looks like they're crushing their estimates and their users. Now, that's their big thing. They got to expand their user base, and we're seeing that continue. You see that they had some great earnings, and so they're crushing it, and the stock is to the upside, up $13 or 8.5%. The options were only pricing in about a 7% move, 6.5%, 7% move going in here. So it's a little outside of that. Not unusual, but that could start setting the pace for the remainder of earnings, especially in the technology segment. Now let's take a look at some names real quick that are going to be announcing tomorrow morning. Now take your pen out, write this stuff down. Bank of America, IV rank is at 24, so it's at the lower end of our scale of 1 to 100. All right. Banks have basically been trading in a very determined range after pulling back for the last couple of weeks, and Bank of America specifically went out at $24.02. I got an IV rank of 24, as I had stated, 50-cent move being priced in to the stock going into the event. So on a $20 stock, you're basically, right now looking at a 2% move range being priced in either up or down. For the next week and a half, to 2 weeks, you're looking at a 68-cent range. So right now, Bank of America is pricing in for the next, let's say, 8 days. the potential to move about 3 to 4% either up or down, but specifically about 2% going into earnings. Now let's take a look at Schwab. SCHW is the ticker symbol. Stock went out at 42.92 after I was trading at 42.93. Now what's notable is that it's been trading on its 20-day moving average. Schwab is a stock and a company that's going to be focused on that 10-year yield. They want to see that sucker well above 3%. It hasn't seen that. As a matter of fact, it went out today. If we take a look at the 10-year yield at, let's just take a look at this real quick. The 10-year yield came out at 2.31%. Now that's going to be very difficult at these levels to say that that balance sheet move is going to be pretty significant, since it's pulled off from 2.6% where it was basically last time it announced. With that being said, let's watch Schwab and the brokers very closely because they're going to make a lot of money on that yield curve, and that yield curve is not moving. You have not seen interest rates moving to the upside on the latter end of the curve, the 10-year and the 30-year. Straddling right at that 20-day moving average. Watch 42.64 tomorrow. Right now, Schwab is coming in at a 15.5 implied volatility range, so not a heightened expectation of big violent moves in Schwab. 97 cents is the range being priced in right now on the $42 stock. So basically, you're looking at roughly around a 2.5% range being priced in going into the earnings announcement tomorrow morning, either up or down. Let's take a look at Goldman Sachs. Now, GS is a symbol. Goldman Sachs has an IV rank of 27, but this one is one that I'm going to watch very closely. I think you could see some potential fireworks here in Goldman. They're pricing in the potential of a $5.44 range in this $229 stock. That's where it went out today. Now it's bounced off with some decent conviction, but grinding to the upside. It's 20 and it's 50-day moving average, but we have a little bit of a battle here for the bulls. With interest rates continuing to stay in the low end of the curve, let's see, and trading, as I had noted, we've seen notable lower volumes so far this summer. Let's see if that starts to impact Goldman's numbers, and I want to see what their forecasts are. It had a 66% move, or 66 cents move today. That was good for 0.2%. With a $5 move being priced in, I mean, right now you're looking at the potential for maybe a 3% range, 3 to 4% range, and they're pricing in the potential for about $7 for the next 8 days. So you're seeing a pretty decent range right around that 6% level for Goldman. Let's see if that continues. Another interesting healthcare stock, Johnson & Johnson. They're going to be reporting tomorrow morning. Stock was down 45 cents, trading at 132.15. Has a decent IV rank at 56.1. So it's right in that intermediate level for vol. That means you should be on your toes for a move in Johnson & Johnson. Right now pricing in about a $2.70 move in the $132 stock. That's about a 2% move or range for the next 4 days. And for the next basically week and a half, a $3 range either up or down. So you're basically seeing about a 3.5% range being priced in for the next 8 days. There could be some decent movement in here, and one thing that's notable is it finished below its 20-day moving average. So 132.53 is acting as resistance now, and it's in what I call the battle zone. This battle zone is between the 20 and 50-day moving average. Watch this closely. It gives you context to understand, well, where's this stock? How's this price action most recently as it stacks up over the last 20, 50, and even 200 days? But I really focus on the 20 and 50. And right now, the bulls are in a battle. And there is a binary event earnings that could move this. Watch that closely. We're going to move it a little faster here. Harley Davidson, one of my hometown favorites. I'm from Milwaukee. Pulled off pretty significantly over the last month. But you see that it's rebounded the last 3 sessions. Watch the retail sales for Harley Davidson. There is an expectation of decline. So if they surprise there at any part of their sales number, that could be a positive for the stock. Currently, right now, Hog is running at a 64 implied volatility rank. That means it's getting into that upper level of implied volatility. That means a heightened sense of potential violent moves. Now, it has resistance at the 20 and 50-day level. So 53 and 54 are levels that there's going to be both short-term and intermediate-term resistance as far as upside price movement. Hog's pricing in $3.12 range. So basically, you're seeing right now about a 6... between now and earnings and now into the end of next week, about a 6.5% range being priced in either up or down. And there is a heightened sense of potential violent moves for Harley-Davidson, HOG. And taking a look at Ameritrade, AMTD. Now, Ameritrade is another broker, peer to Charles Schwab reporting. Their IVR comes in a little bit higher at 25.3. Ameritrade does rely on trading results a lot more than Schwab does as far as activity and how it impacts their bottom line. But the stock has been trading to the upside quite nicely. Finished the day down 23 cents, though, at $24.78. Right now, their estimated move is around $1.03. So you're seeing a pretty muted, maybe a 1.5% to 2% move being priced in at this point in time. Between now and also into the end of next week, you're seeing about a 3.5% to 4% move being priced in as far as either up or down. Watch this one. Again, I want to see how the trading revenue in their forecasts, especially with rates not moving, and taking a look at potential interest rate moves by the Fed. It's really a hold off until December, and we'll watch that very closely. But unless we start to see some inflation or some economic data that's going to change the opinions of the markets right now, very hard pressed to say that you're going to see another quarter point this year, but we'll have to wait and see. Finally, we want to take a look at a healthcare stock, United Health. This is a big boy. Wanted to talk about it. Trading at 186. It was down 55 cents. It's recovered after hours, trading at 186.63. But it challenged its 20-day moving average, finished the day, is now trading above. Healthcare is going to be obviously notable. They delayed the healthcare reform vote. Obviously, Senator McCain, if you have not heard, had some what seems to be serious surgery. He is not going to be available for a vote, so they're going to push this off until they can get the votes, or at least get an idea that they're not going to get the vote. They may delay it again. That's going to put healthcare stocks up front and center because this is a component to tax reform. This has to get passed before tax reform, in my humble opinion. And if you can't get healthcare reform, I don't see how you're going to be able to get tax reform, but who am I? The IVR is coming in at 45 on UNH, on United Health. Almost a $4 move being priced in going into this $186 stock. We're going to watch this one very closely. With the $4 range, you could see it at 190, or you could see it as low as 182. And as you've seen with the Netflix move, folks, it's moved outside. Let's just recap real quick and close out with Netflix. Finished up $13.60 now after hours, after reporting earnings. Blowout earnings, big subscriber bump. So that is positive for Netflix. Let's see if that actually sets the tone for tomorrow's earnings. And now you have all the context you need to put it into perspective. All right, we'll see you tomorrow morning, bright and early here at MarketStream.live. Have a wonderful evening. And as always, go back and take a look at our archives, either on Facebook, just do MarketStream, or you can go to our website, MarketStream.live. See you then.